Welcome back, everybody. Your typical bull here, and today we're going to continue our discussion on trends, and specifically, we're going to be talking about the exponential moving averages and how they function in trends. But before we get into that, please remember to like, subscribe, and comment. Your support really helps out the channel and helps us to grow. All right, so what is a moving average? Basically, for a simple moving average, let's just take, for example, the 20-day simple moving average. You take 20 candles and then you divide it by 20. The closing price of 20 candles divided by 20, and then you'll get your moving average. So the calculation for the exponential moving average is a bit different, and it really doesn't matter if you know this or not, but if you're a math nerd, you may want to. So it's going to be this here. It's just basically a smoothed version. It's more reactive version of a simple moving average. So if you're interested in the math to it, you can Google that, but honestly, you don't really need to know the math. So there are several moving averages that are fairly popular. We are going to be going over the most popular today. And oftentimes, as you'll notice quickly, a trend will find support in its pullbacks on one of these popular moving averages. So what we're going to be going over is the 200, the 150, the 100, the 50, and the 20 moving averages. These are some of the most popular averages in use today. Sometimes also you'll see the 10-day moving average used for very short term. So these averages by themselves can help you determine a trend. So this is very obviously an uptrend, and you can tell that because the 200-day is below the 150, is below the 100, is below the 50, is below the 20. And you can use these moving averages in your trading. As you notice, there's several times that prices bounce off of, these moving averages. See here, price rejects off of the 20. Here, price is rejecting off of the 50. Here, price rejects off of the 20 again. And this happens on any time frame. This is a 1-hour time frame. We can look at a 4-hour time frame. This is an uptrend. All of your moving averages are lined up. And as you can see, price bounces off of the 100 here, bounces off the 150 here. And then as this 20-day moving average starts to cross below here, you notice your trend starts to change. See, the 20-day moving average is moving down, and your trend is also changing. So these can be indications of switch in trend, and they can help you to find locations for these bounces, and you can trade those. So as you can see here, all of this price action in here is muffled, and all the moving averages look like crap. So if you're trading trend continuations, you want to find these nice wave lines where everything is in order and trade this. So here you're back into an uptrend. All your averages are aligned, the 200, the 150, the 100, the 50, and the 20. So now you can start looking for these bounces. And later I'll show you guys how to add indicators to this to make these setups more high probability. But generally, some of the most bounced on averages here is going to be this 50-day and this 20-day, and sometimes you'll see this 100-day used here. Anything below that in your 20-day average is going to start falling below. So here is where your trend changes, and then you get this pullback to this 50-day. And what do you see on this 50-day? Here is a bullish pin bar that is rejecting off of this 50-day. And what I like to see, and we'll zoom in so I can show you, is price to move down below like this does, and then reject and close back above that moving average. And then the next day, of course, you get this green confirmation candle. You can put a buy order in on top of that. You can put a stop loss down below that, and then targets 2 times away. And look here, you hit take profits the very same day. And this is on a 4-hour chart that we're looking at currently. So let's continue on, see if we can find some more setups to look at. Still in an uptrend. Price bounces off of 50 here, but that's not really a tradable pattern. Still in an uptrend. Price is bouncing off of the 20 here. I really personally like to trade the 50 and the 100. This 20 is more of a used to determine the trend. Here we go. What's going on here? Price comes down, goes below that average, and then comes back up and closes back above the average, and then this next candle moves above that to confirm the move back up. Stop losses would go here. Targets would be roughly here. Now let's see if that would win. And that would win. So now we're just going to continue on and see if we can find some more setups. Here's some rejections, and now we notice that our 20-day moving average is falling below, so our trend could possibly be changing. So we don't really want to mess with any of this stuff until we find some clear signals again. So we're looking for, once again, all of this stuff. See how these moving averages are all jumbled? That's more consolidating and finding a new range. Here is a downtrend. Notice the 200 is on top, then you have the 150, then you have the 100, then you have the 50, and then you have the 20. That's a very clear downtrend. So we can look for short setups off of this. See, price rejects here, but it doesn't quite move below that average and then close back above it like I want to see. Here, price doesn't quite do the same thing also. And here we go. What do we have here? We have price move in and close below. And this next candle makes a bearish rejection off of that 50-day average. So targets, entries here, stop losses here, and then 2 times profit. That's a winning trade. And you can test these setups on your own. We've talked about it before. You just scroll through these charts a candle at a time, and you find these setups. That's not a very clear pattern. And now our 20 is crossed back above, so our trend is unclear. And now we're back below. We can look for some more shorts. And then here, price closes there, below that average, and then price rejects here, closes back above that average. You can enter this trade here, stop losses there, targets 2 times away, and then that next day, that's a winning trade. And then we continue on. Now we have unclear prices again. So, okay, so I think that you get the point here. Let's look at a couple of daily charts. This is very obviously an uptrend. It is very clear that these moving averages act as support quite often. If you notice here, price hits the 200, bullish pin bar off the price. Price moves into an uptrend. And in this uptrend, let me just draw the trend itself. So this is the trend as we learned in our last one. I'm just going to go ahead and draw that really quickly. So there's your trend. And you notice that oftentimes on these dips in the trend, it coincides with these moving averages. See how many times that these prices bounce off of these moving averages in these trends. There's one, and there's a very beautiful long setup. Here again, you see price moving to this 50-day average, rejecting off of it, and then moving higher. And like I said, I will show you guys later some indicators that you can add to this specific strategy to make it a more profitable. Here again, price is rejecting off of the 100. And here our trend is unclear again. Let's look at some other charts. Let's look at Nano Dimension. Here's a daily chart of Nano Dimension. So we notice that all of our averages are in a line. This is a very clear downtrend. Let's see how many times we get rejections. There's a rejection. Here's some unclear price movement here. Moving averages. Now we're back into a downtrend, and we immediately start to notice price bouncing off of this 50-day average. Price bouncing off of this 150-day average. Price bouncing off of this 150-day average again. It's holding the 20 here. 50-day average. So these moving averages, they act as support for your trends quite often. And I really do hope that this can help you guys out in your trading. So please remember to like, subscribe, and comment. Your support really helps the channel grow. And I hope this helps you guys out. And we'll see you in the next video. Thanks for watching.